Well, what an interesting day. Welcome everyone. This is the weekend video, obviously. Um, I'm going to go through the six markets that I cover and start at the 4-hour charts and work onto the short-term charts. And let's figure out what happened and where the market is likely to go next. Alrighty, like I said, what an interesting day. I'm going to start on gold today because that is the one I'm going to get most questions about. And rightly so. We were tracking this movement off the recent extreme low, which was at low 1282. And we were tracking that move up, and that was a possible 5-wave up with a 3-wave decline. Now, obviously, that got blown out of the water today. And I still think that this sharp move down has just completed a C wave and is nothing else but the completion of a large degree correction in a possible wave 2. And I'll get into that a little deeper on the short-term chart, but you can clearly pick out here on the 4-hour chart 3 waves down in A. I'm counting 3 waves up in B. And I'm counting a 5-wave pattern down in C. And the recent, let's call it a mix-up for now, or the misdirection, let's say, that the market threw us there recently was we were counting this as 5 complete waves to the downside. And the reason I had been pretty interested in this move up off the low was because we had 5 waves complete into the recent extreme low. Okay, but obviously that 5-wave pattern has been extended, and during the week there we were pointing out that there was a possible triangle also in play there, and that got ruled out yesterday on Thursday with the rise above that declining trend line. So we got a little pop higher out of a declining trend line. So that ruled out the triangle idea. But obviously that has created another 3-wave pattern. And we'll go into that right now. Let's get rid of the scribbles and go down into the short-term chart. Okay. So this is the gold hourly chart, and it's off the previous extreme high wave B, and that was at 1366. Okay, so here was the previous extreme low, 1282, and the movement off that low was the rise we were tracking as a possible wave 1 and 2 pattern. And obviously, as this malaise extended and extended further, we were getting further away from that idea. And obviously, this was the break. Well, let's get that declining trend line in there. So the break above that declining trend line did rule out that triangle idea, which was an alternate wave 4, which would have expected a further decline in a wave 5. But we seem to have developed a very an incredibly hard to read, obviously, fourth wave in an internal 3-wave move. So we had 3 waves up in A, 3 waves down in B, and the only way that you can count that would be a 3-wave pattern. And you might have had it could be 3 waves in A, and then a triangle of some sort, and then a final rise up in a third wave, a C wave. However you count it, the fact that we got a 5-wave pattern declining off that recent high, yesterday's high, well, that just confirms the previous move as a correction higher. And however much I don't want to acknowledge it, it's there, and that's the only way you can. You got to deal with reality, don't you? So this internal move here into the recent extreme low is now wave 3. So obviously we've got an extension in wave 3. So we had wave 1 down, wave 2 in a clear correction higher, wave 3, an extended wave 3, an awfully hard to manage wave 4, and a nice probably ongoing 5-wave pattern to the downside in wave 5. So let's cool the chops a little bit. This is still a completing 5-wave pattern in a C wave, and that's the only way that I can read it. So once the C wave is complete, the market will move up, and it'll move pretty rapidly up in wave 1 of 3. So we're looking at a third wave up in gold, and all my targets still remain the same. I expect wave 3 will probably break 1600, and I know people might find that hard to believe given today's action, but I showed you a chart during the week there about the extremes in bearishness that were dominating the market right now, and I expect this decline today will only make those extremes even will only extend those extremes even higher. I think we were down to what 12% bulls or something recently in the market, so you could probably even expect, as I wrote this evening, you could probably even expect the bullish percentage to drop maybe even below the 10 level, and we may even create new all-time lows in bullish percentage. And with that in mind, it would be new all-time lows at a higher low. So in my mind, the eternal contrarian that I am, that is a pretty bullish sign. So anyway, for early next week, I'm looking for this wave C to finally close out. We're probably looking at 5 waves down, probably one more little pop into the 1270s, maybe the high 1260s to complete wave 5 and wave C. And then later on next week, we should get a kind of commensurate kind of recoil rally higher out of the extreme bearish position the market is in right now. Okay, so that's gold. Let's move on to, I think I'll go to crude. Why not? Because I'm over here now. Okay, so this is the 4-hour chart. We've got a nice, pretty sharp plunge today in crude, like we were expecting. So now we have if you're looking at kind of a long-term momentum setup, we have probably the worst momentum setup or most bearish momentum setup that you could probably look for in a market. We have a nice death cross there on the 4-hour chart. We have lower highs in momentum on both RSI and MACD. See the MACD line there is now topping out, keeping in check with that declining trend channel or trend line. Sorry. So I expect that to turn around. I'll turn lower again to our next week and cross below the central line again. And in terms of the wave count, we have a pretty clear 1-2 and a possible 1-2, and the decline again today in below the previous wave 1 low here. That has only added to the kind of dire situation that crude is facing right now. Okay, so let's get down into the short-term chart to kind of pull a little bit more perspective on this, or a little bit of deeper perspective on this. I had mentioned, actually, one more thing about the 4-hour chart there. I had mentioned recently the alternate view for this move down would be that the recent low was wave 1 in brown, and the only reason I wasn't going with that view was because of the kind of let's say the difference in the size of the correction of that currently marked wave 2 and the previous internal wave 2. So it was a kind of let's say it wouldn't have fitted a more how do I word this this late at night? on a Friday evening. The 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 internal wave 2 would have been way out of whack with this this internal wave 4 here in order to call that wave 1. Now, it doesn't mean that that isn't wave 1, but it means that it points to a another possibility. So I went with the wave 1 at the previous low on the 28th of May, and I call this previous high, interim high, as wave 2. So that's why we're reading this as wave 1, 2, and 1, 2 to the downside. And the fact that we've got a break again of that wave, the recent wave 1 low, that probably adds a little more credence to the current operating count anyway. Okay, so that was a mouthful. Let's move on to the hourly chart. I picture people laughing at me here for some reason. I usually do these videos and it's quite late at night in Ireland right now. It's dark and the day is done, and my mind tends to wander. So I wish I had somebody here, cracking a whip at me in order to keep me on point. Okay, maybe I should get a whip for myself and keep myself on point. Don't go there. Okay, so we've got that's the initial wave 1 to the downside, completed at about 65.70, and then we got a 3-wave pattern up in wave 2, and that completed at 68.59. So 68.59 forms probably key resistance, I would reckon. Initial resistance lies at the 67.16, and that was the most recent high there this week. So we were tracking that move up off the wave 1 grey low, and it created a series of 3-wave patterns. I think we can probably call that a double combination complete, and it was most likely you could call that as, or you could take that waveform there off the low into a Thursday high as a picture perfect double combination. 3 waves in A, 3 waves down in B, and a clear 3-wave pattern up in C. So the move down on Thursday into a lower high did create the possibility that that was a 1-2 pattern to the downside, and we would have been expecting a 3rd wave down, and we got a pretty decent 3rd wave down, a savage acceleration lower really. We got a very slight how would you say, a very slight recovery this afternoon, and again into the close we broke below the previous wave 1, so at 64.18, and that has pretty much confirmed the short-term bearish count anyway. So I would expect early next week to see some sort of corrective rally, and I mentioned between these previous interim lows there within the wave B and the lower degree wave B, so that was 64.85 and 65.42. That kind of it tends to, let's say, previous lows and previous highs tend to attract prices in corrections. So that would be no difference in this case. We have a gap there between 64.85 and 65.42 for this wave 2 in pink here to kind of be attracted back towards. I would expect probably overnight and into early Monday we'd probably see a little bit of an extended decline in wave 1. So I don't expect this to be completed as at today's lows. It'd be a bit foolish after that decline. But Monday I would expect there to be a recovery anyway. So let's expect a recovery in wave 2, and maybe by Monday evening, maybe by early next week, anyway, most definitely Tuesday, we should have a 3-wave recovery complete in wave 2, and that'll complete a 1-2 pattern to the downside, and a further lower degree Elliott wave signal. So then we'll have 1, 2, 3 degrees of Elliott wave signal, and the likelihood for further pretty serious declines in crude. Okay, so that that is crude done. Let's get to stocks. Okay, I'm still counting this as 1, 2, 1, 2 to the downside, and obviously we had wave 2 here has extended and extended and extended, and it has pushed higher and pushed higher and pushed higher. Yet we still get declines into a Friday on extreme bullishness. So on the 4-hour chart that we were talking about during the week, we were talking about these topping at a cyclical high here in momentum, and you can see here that this week's high has matched the previous momentum high on during the middle of May there, and then before that, previous momentum high on the 13th of March. So we're looking at high extremes in momentum, which arrived at lower highs. So this is a third lower high and an extreme in momentum. You can read from that the market won't push much higher, or it'll find it quite hard to push much higher because the buying is gone, basically. We had a bearish signal coming into the close of this week also in 4-hour RSI, so we had a downside break through the central line here. We had a downside break of the 50-period moving average, and we can't really pay a whole lot of attention to that until we start breaking the 200 moving average again. But you would expect, if this initial decline here is part of a new downtrend, then you would expect the 50-period moving average to start forming resistance again, as I've mentioned before. Okay, so let's get down into the hourly chart. So far we've had 3 waves down. So that suggests a correction unless we get further extensions lower in and unless we get a third wave extension in a possible wave 3 in pink. So we could have 5 waves forming in wave 3 pink. I mentioned 24,714. That was the previous wave 1 high. So that's formed initial support. A breakthrough that would definitely lean in favor of the bearish setup. And again, the previous 4th wave low would be 24,249. So for next week, those are the 2 levels to watch. Initially, 24,714. So what I want to see happen here is, let's say wave 1 in gray. We want to see wave 1 in gray complete. So that would be a clear 5 waves down off the most recent high with an extension in wave 3 pink. So that'll be 5 waves in pink to the downside. We may as well complete that while we're at it. A lot of question marks there. And hopefully we'll start clearing up some of those question marks next week. So for early next week, we want to see these interim highs hold, and we want to see further breaks. And we're looking to complete a larger degree signal off the high, and that won't come unless we get 5 waves down and 3 waves up. So that'll be our job over the next week or so, is to see if we get an impulse pattern to the downside, which will confirm a change of trend back down into a 3rd wave down. Okay, let's go dollar yen. I mentioned the alternate account here as a possibility, and I'll delve into that a little bit deeper now. We have this contracting price range today, and it could well be a triangle wave. And I'm talking about the alternate account here. So the alternate account views wave 1 in green, complete at the recent high 110.83, and a possible wave 2 green underway. We should move that over there. And the wave 2 green would suggest maybe an expanded flat. And the reason I'm going for that right now is because of this contracting range. That could be a contracting triangle within a 3-wave pattern in a possible B wave. And this would be in the context of the alternate account now. So this is something to watch for next week. we would still expect to push higher up into resistance, but then you should, from that high, expect a 5-wave decline again. I'm not against this view, to be honest, and the fact that this possible third wave hasn't pushed or accelerated in any meaningful way off the recent low, and the fact that we've got contracting range in the price is pointing me in the direction of that alternate account right now. So I think for next week, the early part, first half of next week, that'll be the job will be to figure out if we are creating an alternate 1-2 pattern to the upside. And if we are, well, that's an even higher degree bullish signal, and it'll be advantageous once complete to look for a run up then in a possible wave 3 in green. So watch the alternate account next week. That'll be the job. Okay, pound dollar working backwards today. Alrighty, so we have a pretty clear idea, I think, of what's happening in pound dollar, and the alternate account in pound dollar is looking more and more likely as the days go by. Even though we got a nice sharp sell-off over the last or on Thursday afternoon there. In general, on the 4-hour chart, we've got 5 waves down in wave 1 green, and we're working on a 3 waves up pattern, possibly a flat pattern to the upside in wave 2. And when I say flat, I'm talking about the internal structure. So it would be 3 waves up in A, 3 down in B, and a possible 5-wave pattern rising in wave C. So we're into the hourly chart here. So the sharp decline yesterday has been retraced slightly today. It's while it's not clear yet, it's quite likely that this rise was in wave 1, and we'll see a 3-wave pattern in wave 2 complete off that high there, which would suggest then 5 waves is underway in wave C. The fact that wave B here has taken such a deep, or has caused such a deep retracement into wave A, well then that has kind of brought down the target for a complete wave C and wave 2. The trend channel now, the upper line of the trend channel now sits at 134.78, 134.80. So I wouldn't expect to see resistance broken at 135.29, which was the previous internal triangle wave 4. So we have a nice kind of a target range there anyway, up towards the latter part of 134 to complete wave 2. The upper extents of wave 2 would be resistance there, 135.30. And this should happen in a 5-wave rally to the upside, and that should occur next week. Okay, the only caveat to that would be a very low probability alternate count, which would view wave 2 complete as a failure at this interim high here at 134.45. I don't prefer that. I don't like it because I just, in general, I don't like failures unless they're pretty damn clear, and this one to me is not clear. So I'm going to stick with my guns on this one, and I expect a larger 3-wave pattern in wave 2, which is what we would expect anyway. It's a larger degree correction, so we'd expect a larger degree commensurate to the decline that we've had. So we'd expect a larger degree in both time and in price range. Okay, so let's move down into Eurodollar, and Eurodollar again. We've got 5 waves down, operating on the 4-hour chart here. We've got 1, 2, wave 3 in green, wave 4 possibly complete, but more likely that wave 4 is extending, as suggested in cable there. So we're most likely moving into a larger 3-wave pattern in wave 4, and then we will see a further decline in 5 waves down in wave 5, and that'll complete a larger degree wave 1 down. Okay, so let's dive into this 4th wave here, this possible 4th wave unfolding at the moment. We'll go on the hourly chart there, I think. Okay, so that's the alternate high wave 4, and that did make a new high. We will concede that point. We made a new high there on Thursday, which is raising the possibility of the alternate count. The probability of the alternate count being correct in Eurodollar is slightly higher than in cable. I think the alternate, because we made a slight new high on Thursday, that does it rules out the failure of a C wave. So it lends a little bit more credence to the alternate count, although I'm not leaning on it at the moment. So we have a break of key support again in Eurodollar. That was 115.53, and the reason this key support is key, we'll go back all the way back here to a previous 4th wave, which came in at 115.53, and a break of that previous 4th wave, which would be significant support and key support. It rules out an extension higher in a pattern, because the previous 4th wave is broken. It pretty much guarantees that the declines of the most extreme high there, which was 125.56, that the declines off that high are in fact impulsive to the downside, and we can expect further declines to come. Okay, this 4th wave here in green is breaking out into a 3-wave, possibly an expanded flat correction, with wave B causing an expansion, if you can make sense of that. So we've 3 waves up in wave A complete, a possible expanded flat wave B complete, and we may be seeing 5 waves up in wave C. And if that's to happen, we should expect, let's see, the previous internal low there. Today's low was at 115.42, so we should expect 115.42 to hold on Monday, and we should see further rises in wave C, up to the 118, the higher 118 level. So, and again on this one, I don't expect resistance to break at 119.90. That I don't expect to see 120 again, actually, in Eurodollar. Maybe never again. But next week, for the completion of wave 4, I expect not to see 120 anyway. All right, so that's 3 waves up in wave 4 to complete next week. And obviously, if we are to look at the alternate count here for the moment, excuse me, if we get 3 waves up off the recent low, excuse me, if we are to get 3 waves up off the recent low and we don't break out to new highs, and we see a clear 3-wave pattern here, well then that will definitely bode more favorably for that more bearish alternate count, which would be 5 waves down in wave 1 and 3 waves up in wave 2. Again, in both the operating count and the alternate count, we expect rises next week. Alrighty, that does it for this week. Have a great weekend, everybody. I hope to see you on Monday evening, God willing, if everything goes well this weekend. And have a safe one, have a happy one, and Godspeed, everybody, and we'll see you Monday. Bye-bye.